Today, stocks turn lower, led by financials. And I got to warn you guys, it's a lot worse than what a lot of you guys may be thinking. Now, we look at how much the market has actually fallen. It's not really that much, but notice the fear and greed index is all the way at 23. We have now entered extreme fear territory. Then with the most recent investor sentiment survey, which came out, we now have a bullish reading of only 33.7. Keep in mind, the prior week was 45.9, and look at the bears. They jumped from 35.6 all the way up to 46.1. So our stock's about to head drastically lower. When we come over and look at how the indices fared across the board today, the Dow was down 301 points. The NASDAQ was down 107 points. S&P 500 down 41 points, with the Russell 2000 being down 5.25. Now we look at advancing issues versus declining. Overwhelmingly, the sellers were in control. We had 72.8% of issues declining on the day. Then as we come over and look at the sectors across the board, financials by far outpacing everything else to the downside, which we're going to talk about here in just a few moments. The only two sectors in the green, basic materials and healthcare, but they were just barely in the green for the day. Like we see right here, stock market news, Dow Jones down 300 points as concern about bank loans spark stock market sell-off. And if you look right here, regional banks crash as more credit cockroaches emerge. And if you guys can see this chart right here, look at these banking stocks. Yikes, absolutely getting destroyed. And the two stocks that I'm actually talking about, Zion, we see right here, nasty down day out there. Zion Bank was down 13.14%. We had a gap lower and it continued to go lower from that point on. However, we also come over and look at WAL. WAL gapping lower, actually finishing out the day down 10.84%. So we go back and look at what was causing some of these bank stocks to go ahead and decline. Well, right here we can see shares of Zion Bancorp plunge 10% after it discloses a $50 million charge-off for loans underwritten by its wholly owned subsidiary California Bank Trust in San Diego and Western Alliance Bank Corp. It basically goes on to say it's dealing with a borrower that has failed to provide collateral for loans in first position. Now, this is going to be a problem, man. Keep in mind, if we scroll down through this article here just a little bit, keep in mind, it wasn't that long ago when we seen First Brands Group just recently filed for bankruptcy. And they also say, and Western Alliance also says they have exposure to First Brand Group. So keep in mind, you first hear about a bankruptcy, but a lot of people don't think about all the collateral damage around that. So is it going to be more problematic out here for stocks? We come over and look at the volatility index today. Look at the VIX on the daily chart. A big spike on the way up. The VIX was up 22%, but we got to be careful with that. Whenever the VIX is up more than 10%, it implies the next 1 to 2 days, the market is likely going to bounce, except for when the VIX starts to go parabolic. Now, I wouldn't call the VIX parabolic, but on the daily chart, this is the highest VIX reading that we've seen in quite some time. We now have a reading of the VIX of 25.23. Then we couple that with the Fed Governor, Myron, wants a half-point cut this month. Now, that's going to be problematic. Whenever the Fed goes on an aggressive rate cutting campaign, it has always been problematic for the stock market. The reason for that is clear evidence something is broken out there, and it kind of shatters the hopes of a soft landing. Now, we come over and look at the Fed watch tool. We can see we only have 12 days left until the next FOMC meeting. And we scroll on down and we can see right now, the market is only pricing in a 25 basis point cut with a probability of 96.8%. Something else that's quite problematic out here, take a look at crude oil. Crude oil has almost made it down towards our first ABC target at 56.85. And I keep talking about this time and time again. Crude oil is giving us a clear heads up. Economies around the world are slowing down. If everything was thriving, we see crude oil at much higher prices, and nobody likes higher prices. And speaking of that, today, My Fund and Futures just announced you can now add the Flex add-on to the core plan, which is the most affordable account. If you want to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Then we come over and look at the precious metal gold. I got to be honest with you, gold looks like it's approaching a blow off top, and something that we were talking about today on the live stream. Come over and look at gold on the weekly chart. Notice if indeed we do close up this week, this is going to be 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive up weeks in a row. When do you guys think the last time was that gold has had 9 consecutive up weeks in a row? If you guys were on the live stream, you already know the answer. If you don't want to miss the next time I go live, Make sure you subscribe. You have the bell notifications turned on for all. I'm going to show you guys when the last time that was and also what occurred starting the following week after that. We're going to go all the way back to March of 2006. Here's the Fibonacci level that we already drew out during the live stream, but let's count it. 1, 2, 3, 4, 5, 6, 7, 8, 9. And then look what happens. We get a nasty bearish engulfing candle, and then the market retraces more than 78% of that entire move up. Now, let me know in the comment section down below, do you think gold is about to do the same thing now as it did back in 2006? I know everybody right now is like, it only goes up. It could never go down. Now, to be fair, I'm not willing to short it right now, but I am going to be actively looking for opportunities in gold come next week. Now, if we come over and look at the SPY real quick, what does this all mean for the S&P 500? If we look so far for the week, we kind of have a doji candle, wick on the top, wick on the bottom of the candle, but for all intents and purposes, basically an inside wick. Now, we come over and look at the daily chart. Keep in mind, we come into this level once, almost twice. The MACD indicator is still crossed to the downside on the daily chart. And I still am in the camp where I believe we're going to try to make our way down towards about 642.54, and then maybe even all the way down here towards 634.05. Now, we look at this on the 4-hour chart. MACD indicator is below the zero line, and this has me a little bit worried because right now we've had that push down. We have a consolidation. The consolidation is nothing more than calls being built. The $1 million question is it calls to go higher, or is it going to be calls to go lower in the S&P? Now, when we look at the 30-minute chart, notice today we closed near the session low. MACD indicator is below the zero line at this moment. And keep in mind, we still have the lows all the way from last Friday. So are we about to get a repeat of what happened last Friday? Because we still do not have resolution between China, the US, rare earths, all the trade tensions and such. So maybe tomorrow is going to be another continuation of what we saw last week. Now, notice the zone that we had drawn out. Yesterday, we came into the minus development area. First time into it, we always talk about we expect the market to either reject out or consolidate. So far, that's still holding up. Now, if we do grab our Fibonacci extension tool, we can measure A to B equals C to D. And notice today we came right down, completing that ABC pattern. Now, we come over and look at the futures markets real quick. Let's come over here on the 4-hour chart. Now, we had one pattern busted that we were talking about this morning on the live stream, and that was this most recent A to B equals C to D pattern. The reason it's busted, the market already came back down below that price point right here. So I'm going to go ahead and remove that off the chart. Now, we still have the possibility that we could still be in a larger A to B equals C to D pattern right here, which would complete up here about 6773.72. However, we are not there just yet. We've already pulled back, and now we're kind of in the middle of the range, but for all intents and purposes, that pattern is still in play. Now, I'm personally still favoring the market coming down. Now, normally the market would have filled the gap from Sunday by today's close. Well, we're already past that. Does that mean it cannot close tomorrow or Monday? No, but on a probability basis, normally if we don't close this by Thursday's close, then normally we're not going to see this gap filled for several weeks. So maybe this is just calls being built, trying to digest all the information we have out there in the market. And as the market, is trying to figure out, do we want to run the all-time highs, or has the market gone too far too fast? We come over and look at the 30-minute chart, and look what we have right down here. Here's the level we were talking about on the live stream, kicking myself in the butt that I got out of the trade a little bit early. But this area right here came from the prior day's minus development area. I think we talked about that in the video last night as well. Now, notice we just barely closed below value area low out here today. Now, in the event, I would expect the market to come back up and test value area low either tonight or tomorrow. However, we got to be careful, right? We had a pretty good sell-off this afternoon. Do we consolidate here? If we do not get a bounce out here in Asia, watch out, the market's likely going to go lower. Now, one of the key levels I will be watching, if we start getting back above value low at 66.68 and we're having bullish price action, I'm not so much focused on the point of control as target number one. Instead, right here at a price point of 6,700, I'm looking for the market to come back and try to retest this minus development area, which is nothing more than an inefficiency in the market. Now, we come over and look at the QQQs real quick. MACD indicator on the daily chart still crossed to the downside. I still think we have lower to go, but notice today's price action. We have a wick on the bottom of the candle. We have a wick on the top. Now, we were able to break above yesterday's high. However, we were not able to close above it. Then we dive down to the 4-hour chart. MACD indicator not yet below the zero line. We still have a bearish cross. It's really a wait and see game. Are we going to be able to break below this trend line right here. If we simply connect these lows, if we break below this trend line, then I think we are going to go substantially lower. But for all intents and purposes, right now, we're just kind of stuck in this little upward channel at this moment. We just had this corrective move. Friday, we had that push down. We have a little corrective move on the way up. Can we bust up? If we bust up above the channel, then I think we're going to run all the way back up to all-time highs in this market. Now, on the 30-minute chart, notice we had the minus development area yesterday. We gapped up above it. And then once we started coming back down, watch out, we essentially came down all day long. Now, notice we closed just back above value area low, but then after hours, right now we are currently below that price point. Keep in mind, we have not filled the gap that was left behind on Monday. On Tuesday, we almost made it down there, but almost is not good enough. And again, if we're going to go down to some of those lower prices, we need to start off by going ahead and filling the gap that was left behind from Monday. Now, we come over and look at the futures markets real quick. What do we got over here? Well, we have a case where we have, here's a high, higher high, higher high. However, here's a low, here's a higher low, here's a higher low, but we broke that low. So we're starting to have a change of character. Now, what would validate this, that we're getting ready to go back down, would be that we come back up, and instead of breaking the high once again, instead the market falls short, and then maybe we set an ABC pattern down that maybe takes us down towards filling the gap, and potentially all the way down towards this high volume node at 24,177. Keep in mind, this morning, I thought we were going to make it up, hitting that point of control. However, the market fell just a wee bit short. Now, as we come over and look at the daily profiles on the 30-minute chart, notice I already have this area highlighted right here. Why do you think that was? That was because the day on the live stream, I was shorting the market with micros, using this as a target location. Now, during the live stream, that was a minus development area, but as the markets came back down through it, it no longer is. The markets re-auctioned that area. Now, the NASDAQ is closing below value area low, which comes in at 24,837. As long as we stay below that price point, I expect the market to continue lower. However, whenever we close outside of value, normally within the next 1 to 2 sessions, we're going to come back and visit that level. So that means either Friday or Monday, there's a high probability we come back and test that level. And keep in mind, the VIX was up more than 10% today, being up 22% on this session. So in the event that we do bounce up here just a bit tonight, then I want to be on the lookout. If we get back above value area low and then we come back down, I most certainly want to be on the sell side. But if we break back above value area low, I then want to start to target some of these high volume areas on the volume profile. And then if things really get froggy out there on Friday, maybe a run all the way up towards the point of control at 25,068. Now, if you guys like to learn how to quadruple your payouts with the new My Fund and Futures payout policy, make sure to check out this next video right here.